A lot has been talked about it. I think we actually need to see some of the detail now with the full data and the analysis of the industry, and for the first time putting the geopolitics into this as well. It is the annual report. So please welcome on stage the Consulting Project Manager, Benchmark Minerals Intelligence, Harry Fisher.
Good morning, everybody. Thank you for the kind introduction. So as Caroline said, I'll talk you through the annual market report that Benchmark had the pleasure to prepare for the Cobalt Institute. Its primary focus was, of course, to provide a review of 2022, which I will go through. But as mentioned, we also touched on geopolitical considerations for the market and the lithium-ion battery market as a whole, and a little bit about where we're seeing the cobalt market going in the years to come. So 2022, I think everyone will all agree it was really a tale of two halves, and that's what I'll initially talk through in my presentation today. Just a quick introduction to Benchmark. We provide forecasting, consultancy, and ESG services to the full lithium-ion battery market. That obviously importantly includes cobalt, but many other raw materials. Myself, I'm in the consultancy division. I've got colleagues with me today from the pricing team, and also Bruna's going to contribute to one of the ESG sessions later in the week. So feel free to come and approach us and talk to us about anything here. So I'll start off on 2022 and really why it was a tale of two halves. I'll then touch briefly on some of the geopolitical aspects, but I'll leave them mostly for you to explore in the report. I'll then talk about the criticality of cobalt to all of the sectors that we're involved in and the broader energy transition, and then look a little bit into where we're seeing the market going forward. So this time last year, we're in sunny Zurich, and we're in a very different situation to where we are now, of course. Prices were close to the peak of 2018, where we were kind of seeing cobalt metal approach $40 per pound. It was on the back of, obviously, a strong period of demand through 2021 and early 2022, primarily from the EV sector, but also kind of a resurgence of some of the more traditional markets after the weakness that we saw during the pandemic. We had supply chain constraints restricting some material movement from the DRC through to China. And we had generally just a very tight market, and that obviously supports these prices. But it really started to turn quite coincidentally around the time of the conference, and sulfate did peak a little bit before metal. As you can see there, the yellow line is sulfate. But what followed for the rest of 2022 and through to today was a very different market, and we really saw 2022 in two quite different environments. But what caused that? I'll talk a lot today about portable electronics and how that's been quite pivotal to the direction of the cobalt market over the last kind of 9 to 12 months. Around this time last year, we obviously saw renewed COVID-19 lockdowns in China. That was creating a lot of uncertainty for cobalt and throughout the battery supply chain with closures and a stop-start nature of the industry, and that was creating a lot of volatility in the markets. Those logistical constraints that I mentioned were easing. We started to see a much greater flow of material that had been held up in the DRC in South Africa that was reaching China, and that was obviously allowing all of that kind of pent-up tightness to ease. And at the same time, and this continues today, we've seen continued expansions from the DRC and from Indonesia, allowing much greater volumes of supply to reach the market. So we all know what happened next. We've seen a significant fall in prices through the back end of 2022, and that's really continued today. So metal prices were down 50% towards the end of last year. They're now down kind of 60% from the peak. We're sitting around kind of the $15 per pound mark today, and we're in a very different environment now to where we were this time last year. And I'll talk through a little bit about where we're seeing the market going forwards. But generally, market conditions are a lot lot weaker than they were a year ago. So just a quick run through of the highlights of the 2022 summary of the report. The EV sector became the largest consumer of cobalt in 2021, and that was really reinforced in 2022. You can see 40% of cobalt demand was from EVs in last year, 30% from portables, despite the weakness in that market. And then you can see some of the more traditional applications of metal. It still adds up to a significant number, but obviously a smaller proportion. And really what was driving that EV demand was, of course, the continued shift to electric vehicles globally. China's obviously led that. We saw strength in Europe in 2020 and early 2021, and now the US is really picking up in terms of EV demand. And penetration last year was about 13–14%, and it will be even higher this year. And that's all obviously very positive for battery demand and all of the raw materials that are needed to go into those batteries. But it was really portables that let the side down last year, and thanks to EVs, we still saw, overall, we saw 13% year-on-year demand growth last year, but there was no demand growth for portables in terms of cobalt demand last year. This is the year-on-year growth of LCO, the cathode chemistry that's used in those portable electronics batteries. And the portables market has been the biggest driver of the LCO market for many years. And up until last year, the LCO market of battery demand, LCO was the biggest driver of battery demand for cobalt. But that changed last year due to the strength of the nickel cobalt chemistries, but also due to the weakness of LCO. And really that was due to kind of the pull forward of demand that we saw at the start of the pandemic in 2020 and 2021, where there was a lot of purchasing of laptops, mobile phones, tablets when we were all stuck at home. And that really started to dry up last year. There was a significant slowdown in electronic sales, and laying over that was a rising cost of living crisis in many parts of the world, in Europe and China, and that obviously impacts the abilities for consumers to buy electronics. So you can see there LCO demand fell significantly year on year, and as a result, cobalt demand from LCO was flat. And as I mentioned, LCO has been the largest driver of battery demand up to now, but that's now changed, and we'll see the portables market kind of start to mature, and when growth rates slow down, and NCM really start to take more share of cobalt demand. And now switching over to the supply side briefly, of course the DRC remains very much the significant producer of mined cobalt globally, and that will remain the case for at least in the short term. But on the left-hand side there, you can see Indonesia appearing quite substantially on kind of as a share of supply growth last year. Indonesia really didn't produce very much cobalt a couple of years ago, but it's really come from nowhere and produced kind of close to 10,000 tons last year alone. We're seeing a lot of growth in Indonesia. I'll talk about that later in the presentation, and I'm sure we'll discuss it during the panel as well. But really, that kind of sole reliance on the DRC is shifting. The DRC will remain a very important producer, but Indonesia will start to follow as well. So, as mentioned, geopolitics was a kind of a key theme of the report this year, and it's something we're certainly seeing at Benchmark as a key theme for cobalt and the whole lithium-ion battery market going forwards. We've seen a lot happen in the last 12 months alone, and we're really seeing it as a key theme in the way in which we look at the markets going forwards. This is just kind of a summary of the topics that were discussed in the report. I won't go through all of them now. Feel free to have a look at the report that's literally just been released. But I think we're all kind of fairly familiar with some of these themes. We obviously saw a long kind of 9–10 month dispute between CMOC and Gécamines and DRC government that has now been resolved, but that's obviously had some market impact and will continue to have some. I'll talk through Indonesia and the importance of Chinese investment there. But I'll focus now on two major pieces of policy announcements that we've seen in the last 12 months in the form of the Inflation Reduction Act and the Critical Raw Materials Act. Both will be huge for the cobalt market, for all of the raw materials that go into lithium-ion batteries, and will fundamentally reshape the way in which these supply chains form in the years to come. So on the left, there's a little bit of a summary about how we're seeing it play out for North America. The dotted line is demand in 2025 from the North American market, and we've split supply for mined and refined by some of the categories we're seeing as part of the IRA. So we've obviously got domestic supply in the darker blue. We've got the compliant countries in green, which are at the moment FTA agreements and Japan, and the EU, which may or may not become part of that compliant set at some point. But then there's that light grey is everyone else. And you can see there's a fairly significant gap between what's available in terms of IRA compliant supply and where we're seeing demand develop going forward. So I've gone into it more in the report, so I'll let you read that. But you can see that there's still a little bit of work in the way in which these policies are laid out for the IRA to kind of hit the targets it's hoping to hit. On the right-hand side you can see for Europe, just a bit of an overview about kind of where some of the mining and refining projects are for cobalt at the moment. Turkey's a very important part of that. But with only 2% of global mine supply last year and 12% of refined supply, if Europe wants to hit that 10% target for mine supply, then again, a lot needs to be done, and there's not a huge amount of development of mining resources for cobalt in Europe. So our view is that it's more likely to benefit the refined side of things for cobalt in Europe, whereas for the US, I think there's probably more upside for mining, both domestic mining and mining in FTA countries such as Australia and Canada. But that's just a bit of an overview of those key pieces of policy. If you've got any more questions, feel free to come and chat to me afterwards. So now just moving on to kind of the importance of cobalt, and I think we're all in agreement with this. This is why we're here. We're at the conference, and we're all kind of talking about the same thing. But I think it's important to reinforce it. There's a lot of talk about LFP, particularly in China. It, of course, doesn't have any cobalt in, and that's obviously a risk to the demand profile of cobalt going forwards. On the left-hand side, that's the additions to cathode capacity in China in the last few years. You can see 2020 and 2021, LFP and the nickel-cobalt chemistries were kind of fairly similar, but last year, LFP did really pull ahead in China, and there was a significant build-out of LFP capacity on the back of kind of a rise in demand, particularly from the domestic market. But this is still very much a China story. It will change over time, but at the moment, the vast majority of LFP capacity remains in China. On the right, you can see our view of cathode demand over the last few years, and that LFP share has risen, of course it has, and that has had an impact on average cobalt intensity. But all of those other colors on the chart are all containing cobalt, and we do expect some further gain in LFP, both in China and the rest of the world, but still very much relying on cobalt-containing chemistries, as you can see here. Still kind of close to 2/3 of the market relying on cobalt chemistries in some form, and that's split between kind of the NCM chemistries in the blue colors and NCA and LCO at the top. And I think this is reinforced by the level of upstream activity we've seen in the last year and even in the last few months. There's been a lot of announcements from the kind of the mid and the downstream into the upstream of the cobalt market to ensure that everybody has access to enough material for their plans in the years to come. I won't go through all of this in detail, but this is just a kind of a snapshot of some of the key announcements in 2022 alone. And as I said, there's been more in just this year. We've seen the likes of VW and Ford from the OEMs investing in upstream projects in in Indonesia. We've seen multi-year supply agreements from GM, from Renault, and we've seen CATL in kind of increase their exposure to the DRC and Kasanfu. So that really reinforces the critical nature of cobalt to the energy transition. This isn't going away, and we kind of all need to move in the direction to ensure that cobalt remains kind of an important and sustainable part of that transition. So now, just to kind of wrap up my presentation, I'll give an overview of kind of where we're seeing the market going forwards. I think I've provided a summary of where we've seen it in the last year or so, how geopolitics is unfolding, and the important nature of cobalt. But just looking ahead, the cobalt market is very much kind of reliant now on the battery story. But this is only really just getting started. In terms of battery demand over the last few years, it did pick up quite substantially at the start of the pandemic as EV sales really kind of set off. But when you compare that to the next 10, 15 years, that's a very small part of where we're seeing this going. It's really only just begun. And that wave of battery demand that's coming, and as you can see in the yellow, it's primarily from EVs, will really support a number of raw materials markets that are required for batteries. And that rising EV penetration, the rising share of EVs as a share of overall battery demand is, of course, supportive of cobalt, and will mean that that 40% we saw last year will become 60, 70% of the cobalt market by 2030. The portables market, as I discussed, is kind of maturing, and those growth rates will slow down. Demand will continue to go up, but its overall share will fall. The same for some of the more traditional applications. There's still demand growth there, but maybe not quite at the same rates as we've seen before, and its overall share will fall. But it's really EVs that is driving this market going forwards. 90% of growth to 2030 will come from EVs alone. And I think it's important to remember that there's a lot of talk in the market about those other raw materials. There's a lot of talk about lithium, there's a lot of talk about nickel. And quite rightly, they're all important, but I think in kind of looking at it through a cobalt lens, if you compare to, say lithium here, from 2022 to 2035, it'll increase by about 7 times overall market size. That's a huge amount of growth over that period. Compared to nickel's probably only going to double. And I say only double, it's still a significant amount of growth over kind of a 10, 15-year period. But it's important to remember that cobalt's still growing a lot. If you ignore the lithium line, it looks very good. The market will be 3 times the size it was last year in the next 10, 15 years. And I think that's really important to remember. There's a lot of talk in the media about lithium and other markets, but we're obviously all kind of invested in the cobalt sector, and that's really how we should look at it. This is a key part of the energy transition. And now looking at the supply side, this is our view of kind of the share of supply growth to 2030. Of course, the DRC will be the major provider of supply over that period. But if all of those Indonesian projects that are being discussed reach the market, and I'm not saying they will, but if they do, Indonesia could quite conceivably catch up with the DRC in terms of supply growth. So it's really becoming a kind of a 2-country driver now, rather than just solely being reliant on the DRC. But what have we seen? What have we seen happen in Indonesia? The chart here shows the way in which we've been tracking nickel and cobalt supply from Indonesia over the last year or so. So in early 2020, in our forecast, we only had 25 projects in our forecast. Fast forward to now, that's now over 40. And that's changed. We're almost seeing new announcements every week or every month at the moment. There's a huge amount of activity in the Indonesian market. Obviously, a lot of them are still in very early stages, but we've seen quite a lot of success already in Indonesia. And as I mentioned earlier on, there was about 9,500, 10,000 tons of cobalt supply there last year, and that's rising to 16,000, 17,000 tons this year. The large proportion of those number of projects in this chart from HPAL processing, and that's really where we're seeing a lot of growth. But you can see that there's a lot of other projects there which are primarily matte and other routes. But it's really the next 5 to 10 year period where we're potentially seeing a lot of new additions beyond the 3 or 4 HPALs that are already operating. And on the right there, you can see the intent of some of the downstream into Indonesia. This is something that's happening, and it's happening quickly. There's been big commitments from the OEMs, big commitments from some of the battery producers, not just into nickel and cobalt, but about how they can build a whole battery supply chain in Indonesia. So this is basically every supply that's been announced to date. So this is total potential. This is not our base case view. But you can see over the next 10 years, cobalt supply from Indonesia could go from around 10,000 tons to close to 100,000 tons if it all is developed. But there are risks from project development. You can see here only around 20% of current supply in our forecast is operating. A very small sliver is highly probable in the way in which we assess our supply. But about 3/4 of the market is probable or possible. So there's still a lot of development there that needs to be done. And we take that into account in the way that we look at our supply forecasting, and we weight them accordingly. And I think the final thing to think about is ESG, which I haven't spoken about too much today. We've mentioned it a little bit more in the report, and I'll leave it to the sessions later in the week. But it's really important to highlight here a couple of things. On the left, we've got benchmarks, LCA analysis of a couple of the major cobalt producing routes. So in the green, we've got DRC for global warming potential, acidification and eutrophication. And in yellow, we've got the equivalent for the Indonesian route. So you can see that at the moment, the Indonesian route is significantly more impactful across a number of different categories, not just emissions, but for other areas. So there's still a lot of work that needs to be done for that Indonesian supply to enable it to be sustainable and for us to be able to rely on that supply going forwards. We've also seen a lot of reports of safety and social unrest in Indonesia. So there's a lot that needs to be worked through, as there are for other parts of the supply chain, to ensure that we have sustainable sources of cobalt for the years to come. And with that, I will say thank you and leave you with some key takeaways, which I'm sure we'll discuss more during the panel. Thank you very much.
Harry, thanks. Do you want to go on, because you're staying on for the panel? Really, really interesting. So much to talk to you about on this one. I just wonder though, because it was a lot about Indonesia, obviously there, and when you look at the risk factors or potential risk factors for that big chunk at the end, that's the possible. What is it? Is it a lack of external finance? Is it the politics around Indonesia? What's the biggest risk factor that you see of those possibles not coming to fruition?
Yeah, it's a really good question. We take into account a number of different things as part of our assessment criteria, but some of it really is to the fact they've only just been announced and they're quite early stage. They need to go through a lot of due diligence, as you say, financing. But we're increasingly taking into account the ESG angle as well, and that's something that we're now taking into account for our supply status. So some of those will progress from possible into higher categories, and therefore they're waiting, and that lifts the supply forecast. But a lot of it is the fact they're still a long way off, and a lot of these projects don't make it.
It's always interesting to see whether, though, you have that sort of domino or snowball effect, that the more that it's talked about and the more other projects come, whether actually that sort of boosts all those other possibles as
definitely.
well.
There's certainly a domino effect, as you say, of synergy in the region and more investment coming in, and we're already seeing a lot of interest from the OEMs in Indonesia. So I think it's just a matter of time before it really starts to gain momentum.
To have a look and see what deals are being talked about and made there. Now, there are copies of the report at registration. You've already said that you're very happy to take questions, so you can find Harry a little bit later. But he's here now on stage for our first panel, where we do a deep dive now into everything, all the themes that Harry has been talking about. So I shall welcome the moderator on stage now, Kwasi Ampofo from Bloomberg NEF. Kwasi, thank you very much. Thank you. Kwasi, thank you very much. Thank you.
Cheers. Hey, Harry.
Hey.
How are you?
Very good, thank you.
That was a brilliant presentation there. I really took, I think, 7 pages of notes. So I'll give you a moment, catch your breath. But whilst you pour the water, have you had breakfast?
I have, yes.
What did you have?
I had an omelette, actually. It was very nice.
Oh, that's great. Yeah, you beat me to it. Look, thank you so much once again, and I do hope you've managed to catch your breath. And I did scan through the audience whilst you were presenting, and for me, the whole idea was really to try and capture the moments where the audience take their phones and take pictures and ask you questions on those parts. So I think the first thing that came up was when you showed the slide on demand. And there was something interesting. I think you talked about portable electronics, you talked about electric vehicles, you talked about the different battery technologies, and the fact that ultimately there's been a switch to chemistries like the lithium iron phosphate one, which uses probably no cobalt, and that could potentially harm demand for cobalt. There's also been increasing conversations around battery technologies like sodium ion, which we know does not use cobalt. So when you sort of take a look at into the future for cobalt demand, where do you see cobalt's future, like specifically across this horizon where other technologies are competing which uses no cobalt?
Yeah, so it's something that we get asked about a lot across the work we do, but specifically for cobalt, and I think this thematic for cobalt is probably never going to go away. I think it's always going to be at risk of kind of substitution and kind of, but it hasn't necessarily progressed at the same rate as people thought a few years ago. Yes, the average intensity has been pulled down by the rise of LFP and other chemistries, but still a lot of those chemistries do rely on cobalt to varying degrees. But we're still seeing cobalt as being a key part of a number of those chemistries. Really, the biggest share going forwards will be for LFP and for NCM, and it's really that stack of NCM chemistries going from lower nickel intensity through the mid, the 5 series, 6 series, and up to kind of 8 series plus. That does pull down cobalt intensity as the nickel intensity increases. But from what we're seeing in the market so far, they're struggling to remove cobalt from those chemistries and even to pull it down to the lower intensities because it's needed for the stability and safety of those chemistries. So we are seeing strength in LFP, and that share will rise as an overall share of the market. But we're still seeing a key part for those nickel cobalt chemistries, and they will maintain the larger share.
No, that's great. I mean, that's really comforting to hear that obviously cobalt is still going to play a key role. And I think research, I've also been in the research industry for a while now. And what I know about consulting projects is that there is always that moment where the data speaks to you and you go, wow, I didn't know this. And my assumption would obviously be in Indonesia coming second. I think yesterday it was mentioned earlier that some of the press released it and the headline was Indonesia #2. Was that the aha moment for you when you were doing the report?
Yeah, I think that and the fact that LCO was no longer the biggest driver of battery demand for cobalt. I think those, for me, the two. Yeah, sometimes you look at the numbers and you don't realize until you kind of put it on a chart in what you're seeing. But yeah, Indonesia has quickly become the second largest producer. It's overtaken Australia. It's overtaken the Philippines. It's really come from nowhere, and there's been a little bit of cobalt production on the side from other nickel routes in previous years, but it produced kind of close to 10,000 tons last year. It'll be kind of 50, 60% higher this year. It's moving quickly, and the success of those HPALs has been quite unexpected. There was a lot of skepticism about that HPAL technology from a lot of people, myself included. Yeah, and I think we've all been proven wrong, and it's gaining momentum, and there's a lot of projects out there now.
So, I mean, I had my money a few years back on Australia and Canada, obviously being in taking the number 2 spot. What do you think were the key drivers for Indonesia?
I think a lot of the current producers are kind of Indonesian, Chinese ventures, and I think that's been really important. There's been a lot of expertise coming from China to enable those HPAL, which is a complicated process route, enable them to produce quality material. Previous work I've done also looking at kind of the supply chains between the two countries, very close links beyond cobalt and nickel, and there's long-standing links in the coal industry and the copper industry, enabling them to move equipment easily between the countries, and that means that they can ramp up and repair and move quickly on new projects and expansions.
Yeah, so something interesting for you to know. So last night, obviously, after I read the press in the FT, I called a colleague and a friend in Australia who's in the cobalt industry, and like, hey man, did you just realize Indonesia has overtaken you? And he said, no worries, mate. After all, ESG would get them at some point. Auto companies want clean supply chains, and they will probably shift from Indonesia if Indonesia doesn't solve its ESG challenge. Do you think that when I look at your supply curve, obviously there's a probable and those that could not potentially come online, do you think ESG could really eat a lot of or a big chunk of that future supply?
I think at the moment it's certainly a risk. I showed the kind of some of the impact categories from our LCA there, and that's just kind of one small part of the ESG story. But at the moment, a lot of that supply won't be kind of able to go to the OEMs because it just won't be acceptable from an ESG point of view. That will change, and I think from an emissions point of view, there's a lot of work that can be done for reducing the reliance on coal and diesel and increasing use of renewables. The Indonesian government, even in the last few weeks, has kind of increased its intentions to crack down on some of the environmental monitoring. So I think it's all heading in the right direction, but there's a long way to go. And at the moment, there's a potential that the Indonesian market could kind of bifurcate between kind of ESG compliant and non-ESG compliant, and the ESG compliant material will probably end up in Europe and the US through those kind of OEM deals. But this is kind of looking a bit further ahead. It's still early days. It's only really just begun, but I think at the moment it is certainly a risk.
And I know the Honourable Minister for the DRC is here, and obviously the ag grade is relatively cleaner compared to Indonesia. So does that challenge present an opportunity for the DRC?
Yeah, I think certainly. The DRC is obviously a very established producer. It's 75% of global supply, so it will remain key to the cobalt sector. But I think it's important for the sector as a whole, and it's the same for any commodity market. It's important to have a diversified supply base. And increasingly, with kind of the move towards the IRA and the CRMA and regionalization of supply chains, it's important to have supply closer to the end-use markets. The DRC, I think, will support Europe more and more going forwards, particularly if there's greater build-out of refining capacity in Europe. But Indonesia will be important for the Asian market.
Yeah. And I think you raised a very important point, the IRA, the CRMA, and honestly, I'm losing count of those alphabets. But the whole idea of all these alphabets is really to boost supply, and as you rightly mentioned, to diversify supply. Do you think this will really move the needle in terms of diversification?
I think it's still got to be tweaked to find the right balance. Talking to a few contacts already over the last couple of days, they're not seeing any kind of really tangible impact of the IRA yet, even in Canada and the US.
Well, with all that money.
Yeah, so that's interesting. If you're developing a bigger project and you're not quite seeing it yet, I think it's probably a bit early. But at the same time, we've seen billions and billions of dollars of commitments in the North American market already, just since the IRA announcement. So I think over time it will make an impact, and certainly our view is that it will start to reshape these supply chains. But this isn't happening overnight. It's these pieces of policy are to help drive investment in the right direction. But it's a 5, 10, 15-year story.
Good. 5-year, 15-year story. So before I invite our other panel members, so I have a very quick fire question for you. You can only choose one word as your answer. You don't have to explain to anyone. China or the US? And I don't mean your next summer travel. In terms of who, given the IRA, given how China has invested over the last 10 years, who do you think will be the dominant player by 2030? Think carefully. One word. Is that your answer? Final answer?
You warned me about this question, so I did see it coming. But it's a difficult one, and I'm not going to give you one word because I don't think that would be represented well.
Of course.
I think the US, the way the IRA policy is key for the US's position in the battery supply chain going forwards.
Yep.
That's a very key kind of mark in the sand for their intent for the sector. For Cobalt, I still see China as being a key player. So I'm going to sit on the fence and say the US, in terms of the whole battery story, I think the US is certainly going to become a major player, and the IRA will help with that. But for Cobalt, I think China will of course, because of its importance for refining, its investments in Indonesia and the DRC, China will be key for Cobalt going forwards.
And ladies and gentlemen, it's always important to be non-aligned in these times. A round of applause for Harry.
Thanks very much.
Yeah. Oh, but you stay. Yeah. And so I think we've probably had enough of Harry. He'll still be here. I'll still ask him questions. And there would also be a session where I open it up to the floor and the audience to also come up with questions. Certainly, we don't have all the questions. We might not even have all the answers. So at some point, I would also want to hear from you what contributions, what your experiences, but most importantly, what questions you have for the panel. Not for me, though. But then with that, I would invite our colleagues. So Rob, yeah, and then Yan Chen, if you can please join us.